options contract represents controlling 100 shares of an underlying asset. Hey, hello traders. Welcome to Options 101, the course about introduction to options. This is part one where we're going to just dive right into what options are. So let's get started. This course is typically designed for those who have no experience with options whatsoever. You're new to options or have a very limited knowledge of what options are. So if you are new, you're in the right place. In fact, if you don't have any knowledge, that's even better. You don't have any misunderstandings or misconceptions to unlearn, as well as we do take a specific approach to them here at OptionGenius. So this course kind of leans toward what we do with options versus a really in-depth, complicated overview of what options are. So you don't need to know everything about what an option is in order to be successful trading options. So this is just going to be a very basic introduction to what options are, as well as get you ready for our strategy courses. We offer lots of different strategies you can apply towards options trading, and this is kind of the jumping off point for those strategy courses. Now, one of the things we're going to do differently, you saw that this was part one. These parts are going to be relatively short in nature. I'm going to layer that information on top of each part so that you're not overwhelmed. This isn't going to be a 90-minute course or a 2-hour-long course where you have to block out part of your day. These are going to be 10 to 15 minutes on average, so you can kind of get a piece of information, sit with it for a while. You can watch multiple parts in a day if you want to. It's up to you. You can stretch it out over a couple of days, a couple of weeks even, so that it's not overwhelming to you. More time to kind of absorb the information. What I do recommend, though, is to take notes. We're going to be talking about a new vocabulary. Options have their own verbiage when we discuss trading options. So treat it like a class, write things down, write down definitions. This is a recording, of course, so you can pause, rewind, whatever you need to. As far as reviewing information, if you do have questions that come up, write them down, but hang on to them until you're done with the whole course. Chances are your question's going to be answered in a later part of the course. Again, we're going to be introducing the complexity necessary over the various parts of the course, so you might get a question answered later. But if not, feel free to email us at help@optiongenius.com. and we'll be happy to answer any questions you have about options. All right, so here are the various parts of the course. There are 10 parts in total. So we are on part one, what are options? How are they different from stocks? I'm going to be comparing them to stocks today. And so if you want to pause and look through the different types, I'll be introducing them as we go along in the various parts. And then the last two are not really options specific, but more toward trading. So let's keep going here. All right, so this is our standard disclaimer. Please pause and read through the various points here. Essentially, this is all for educational purposes. None of us here are financial advisors. All right, hopefully you had a chance to pause and read all of that. Let's get started. So I'm going to compare stocks versus options. What is a stock compared to what is an option? And I thought I'd start here because most people, when they get into options, it's because they're already an investor. Maybe you even trade some stocks. Maybe you're a trader. You've just never traded options. So how does a stock compare to an option? Well, stocks, when we trade stocks, we buy and sell a share. We call them shares. We buy shares, we sell shares. And what that does is allow you to own a percent of the company that you are trading. So if you buy shares of Walmart, you are technically an owner of Walmart Corporation, albeit a very small percentage because there are millions and millions and millions of shares out there. So you're only owning a very small fraction. Right? And then shares last forever, meaning as long as that company is still around, you still own those shares. You still have a percent ownership of that company. Well, companies like Procter & Gamble, they've been around a long time. So things like that. But there are some exceptions. Twitter was a company that was publicly traded for a long time and then was delisted. It took itself private, so you can't trade Twitter anymore. Or say a company that goes out of business like an Enron. You know, they were publicly traded and then they went bankrupt, so that they are no longer traded. All right, now let's compare that to what an option is. An option is a contract. When you trade options, you are buying a contract or you are selling a contract. Compared to shares of a stock, you're buying or selling a contract. And just like any good contract, you're going to have some terms and conditions. And we're going to go over just a few of the most important terms and conditions, and then we're going to layer some of the additional ones on top of it. Again, this is very basic in nature, and then we're going to build on it throughout these parts of this course. One of the main things we're going to discuss in this is that contracts expire. Most contracts have some type of a date by which something needs to be done. And that is also true of an options contract. We'll get into what that means here shortly. All right. So first, the first term or condition of an options contract is an agreement between two parties to exchange 100 shares of an underlying asset. So like any contract, if you have a residential real estate contract, you're a buyer or a seller of real estate, that contract represents the house or the condo or the apartment or the commercial building, whatever it is. So similarly, an options contract represents 100 shares. And those shares can be in an individual company like Apple or Verizon, Walmart. Those shares can represent an exchange traded fund like the S&P 500 ETF, which is SPY, or the NASDAQ ETF, QQQ. So the contract is saying, hey, you and I, or two people or two parties are going to exchange 100 shares. One person's going to sell them, one person's going to buy them, and it's going to be a specific underlying asset. That's what we call the particular company or ETF. We call that the underlying asset. All right, so that's the first condition is 100 shares. One contract represents controlling 100 shares of an underlying asset. Next, the contract determines the price. So you and the other party are agreeing to exchange those shares at a specific price. For example, if we were going to exchange Apple shares, you might want to exchange them for $190 a share, or those S&P 500 ETF shares, SPY. Maybe you want to exchange them at $438 a share. So just some examples. You set a specific price, and that's determined when you decide to buy or sell that option contract. So we'll get into that in a later part. Just know that the second condition is you're determining the price that you're going to exchange those shares at. And then, as I mentioned earlier, there is an expiration date, a date by which all this needs to take place. And that is decided at the time the contract is created as well. In trading, we refer to this as the expiration date. And the expiration date typically takes place on a Friday. Not all, but most will expire on a Friday at the close of business. The markets close on Fridays before the weekend. So that's typically when those expiration dates take place. And we refer to the amount of days between the time you start the contract and the expiration as DTE. How many days to expiration? What is the DTE of your contract? How many days before that contract is set to expire? And again, we'll get in more details, but for now, those are the three basics. Options are traded in contracts. Each contract represents 100 shares, and the contract will determine the price at which those shares are exchanged and determine the date by which those shares need to be exchanged. All right, so that's part one, and thank you. We'll be seeing part two.